Welcome back to Squawk Box. I'm Jim Iurio from the floor of the CME with breaking data in the form of personal income and spending. The personal income number came out as plus 0.5 from an expected plus 0.3, so a little better than expected. The personal spending number, plus 0.4, a little bit worse than expected, plus 0.5. Kind of the same pattern as last month, better than expected personal income, worse than expected personal spending. Real personal spending, plus 0.2, lower than expected, plus 0.4. PCE deflator month over month, plus 0.2 as expected. Deflator year over year as expected as well. The reaction was not much in the stocks. We were up 6.5 coming in. I think most focus is going to be on the G20. I heard some smart guy was talking to you yesterday on air talking about how there's other stories to concentrate on, Brexit, things like that. I really don't think the market's concentrating on anything else other than the G20. They want a positive result or a negative result. I think it's going to be a binary thing, and I don't think the stocks can have a very decisive move until we get that. The 10 years 2.017 going in, 2.017 now. Back to you, Becky.
So if this is a binary situation, let's create an analysis or let's pretend that we know what's going to happen and then you tell me how the market reacts. Let's say we walk into this, there is a meeting between the two of them. They agree to continue talking, but there's no concrete deal that's reached. How does the market react?
Agreeing to continue talking without some very, very positive words accompanying it will be viewed as a negative outcome. And now that I said it was a binary outcome, I'm going to walk back that a little bit because there's a lot of different gradients in this. I think the baseline for positive is that we're going to continue talking. We made a tremendous amount of headway, and hearing that from both sides, that's a positive outcome. A negative outcome is walking away from the table, and then there's going to be that amount of time between when the negative outcome happens to when the Fed comes back to dry our tears and make us feel better and tell us that there's probably going to be a 50 basis point move in July, which I do think will happen if we get a negative outcome. But the time in between is what I worry about.
Were you on yesterday, Jim?
Earlier this week.
Yeah,
you were on yesterday. Is that when you said the smart guy said so? Were you talking about yourself yesterday? Saying something?
I think I was. Yeah, he was. Yeah, you saw right through me.
Well, all he's doing is.
Did you know that?
All he's doing
Did you
is
know he meant
following your
himself?
lead.
Yeah, he is.
I was not. I was talking about you, Joe.
There you go. There you go. I really think he was talking. I liked it. I said, wow, that's masterful. A smart guy yesterday said, huh? I know you like. All right.
You do. I hate being figured out like that.
The back of my...
He's laughing. Jim, okay, let's play this. Let's play the meeting goes okay. There's sort of positive stuff that comes from each side. No deal is met. And they walk away the same way they walk into this, where President Xi's saying, we need to see Huawei, we need to see X, we need to see Y. President Trump walks away saying, you're not getting Huawei, you're not getting X, you're not getting Y, but we're still talking. Happy talk, but no concrete measures. And then the Fed doesn't do anything. What's the market reaction then?
That's a negative outcome. That's a negative outcome, and I think the market may force its hand then. The market's been in a pretty tight consolidative pattern for the last couple of weeks, and I think what it's saying is that we want something now. And if that happens, I think the S&P goes below 2,900 and starts forcing the issue. I think that would be viewed as a relatively negative outcome. I think there needs to be some progress made and some better, more, better feeling speech that comes out of it.
More better.
Yes.
Jim, thank you. You're a really smart guy. Have a great weekend.
Appreciate it.